All right, welcome back, everybody. Bitcoin still chopping around in a tight sideways range. Will we go to the upside? Will we break down to new lows? The bulls, the bears, playing a bit of a tug of war, but really more indecision in the market. So, this is not the best time to be aggressive. This is more of a time to allow the price to make its move, to make the direction more clear, break out of this tight range. So we'll take a broader look and we'll do our usual breakdown. All right, so this is Crypto Rolly, the crypto watch that never stops, live technical analysis, price predictions, and trading. These are my own ideas and opinions on the market, so please do your own research, trade at your own risk. Hit that like, comment, subscribe, tick the bell for notifications. All right, let's look at the market here. Going over, we can see we did get a little bit of a bounce. Bitcoin's up 3%. You see Ethereum almost 6%, Chainlink about 4%, Tezos 5%. Nice little bounce, but we did have a fall the previous day, and the volume is pretty low. We've seen a lot of low volume the past few weeks, makes it difficult for any type of continuation, and we have seen sideways movement. The Crypto Fear and Greed Index actually crept up to about a 19. This might be the highest. Well, we do have this peak at 21 right here. You can see just above my head there. But 19 creeping up a little bit. We've been stuck way down in this range. You can see, you usually don't stay in this range very long, but because of the pandemic, we have been down in this fearful zone. And I'm starting to feel like as long as people are worried that there's going to be a crash or there's people excited about shorting the market, the price just continues to move up. And when everyone is greedy and people are super greedy and they think we're going to 20K, that's when the price dumps. So as long as we stay in this real fearful zone, we may not get that pullback. Of course, anything can happen, but we've been looking for a pullback for a while and the price keeps going up. The quote of the day is markets can stay irrational longer than you can stay solvent. Basically, you may have the right idea. You may believe that the market is, overvalued. It's due for a correction, but your timing can be off. So though, the pullback might come, next week or, 2 weeks, but you've been waiting on it for a month and you've been getting wrecked in shorts, so you have the right idea. It's just about the timing. So that's why, today's video, we're really talking about watching for that breakout. Okay. 19 days till the Bitcoin halving. So less than 3 weeks away from the halving. The previous two halvings, there was a sell-off. The month leading into it, there was a sell-off. So, I was slightly anticipating maybe the same thing to happen. You have other people who are actually bullish and think that there's going to be an increase in price in front of the halving. So you have two different camps, and neither of them are really outweighing the other. So we are just deadlocked. All right. Interesting piece of news real quick, following up on that big oil crash. Basically, some experts are saying that this could actually be good for Bitcoin. Maybe in the long run, this is better for Bitcoin because basically, the issue with oil is they have too much of it and no one is using it because of the shutdowns, the lockdowns. You have, less pollution because there's less cars and airplanes, which, is a good thing for global warming, but a bad thing for oil companies. They have no one to sell their oil to. And Bitcoin, on the other end, is actually going to have a halving in 3 weeks, which makes it harder to mine Bitcoin. We're going to, it says, expected to cut the supply rate by half. So we're cutting our supply rate on Bitcoin while oil doesn't know what to do with its supply. And also, Trump has been quoted that he will never let U.S. oil and gas industry fall. Okay, he will never let it down. And yet we still saw negative oil prices. So when you see such a large part of the economy fall like that, people might start to look for other places to move their money. And with Bitcoin having its halving, a limited supply, having its supply rate cut in half, these are things that may make Bitcoin look better in the eyes of investors moving forward. Okay, so interesting to see, different takes. The other day we were like, we're in a panic, oil's dropping, all the economy, all the industries are going to drop. But you have other people taking a look at this as a possible opportunity for Bitcoin. So looking at the chart, we have been just going sideways. Great for scalpers, not great for breakout traders, or trend traders, people looking for swing moves. It's just a lot of just up and down, indecision. And this looks a lot like the stock market chart. We won't spend much time on that here, but just looking at it, you can see the stock market has had its rally, and it was putting in some bearish daily candles. After that oil collapse, it did have a bit of a sell-off, and then it's bounced, and Bitcoin has done the same thing. So until you have a major pullback in the traditional markets, we might not get that major pullback in Bitcoin. Looks pretty similar, doesn't it? Okay, so we'll go back over to Bitcoin. So you can see that dip there, that was the oil crisis, and then a green candle on the daily bounce. Well, that lines up exactly with these candles here and then a bounce. So, everyone's just kind of waiting to see what's going to happen. You can see the volume here has been just continuously falling off until we get some large volume to come in to break to the upside or the downside. We could just continue chopping sideways. Looking at my drawing charts, we are looking at a bit of a rising wedge, rising channel. You have, and this is using the daily candle bodies. You have your touches here, a touch. And we came down on that oil little collapse, and we bounced right off of this trend line and found support on it, and then retested higher. Another trend line to look at would be this horizontal I've drawn using the top of these candle bodies on the daily. You can see a lot of wicks as support here, and we came down and tested it again as support and found a bounce. So you have a nice horizontal. This is coming in around 67.70, and then you also have a rising trend line of support as well. When we had this bit of a bounce, I woke up this morning to that. I was just very doubtful of it, just because every move we've seen hasn't seen any follow through. You see, a spike in volume here, but then it just falls off. So you see that spike in volume, we drop, and then no volume, chop around, up. And this one actually just corrected it back again. And then you had a spike. We thought, okay, the volume's stepping in. This could be it. And no volume. Volume's falling off. Ended up falling back down. Large volume spike. Could this be it? Could we get downward continuation? No volume, chopping around, spike up. So on this one here, when we were right here, was I looking for a long? Not really, because I didn't think there would be volume to follow through, which we're looking at. Of course, it could step in, by the end of today, maybe we break higher, but I just wasn't immediately ready to jump in a long after seeing this, because of the volume issue, how choppy it's been, and also we're putting in lower highs. You have this high here, a lower high, and a lower high here as well. So you have this, you could see how there was this trading range here created resistance. When we came back to retest it, you met this trading range. You can draw like a little, it would be a bit of a box maybe, let me change the color on that. So, 1 second, that was the wrong one. We'll change the color on this one. So you created a bit of a box in here, this little trading range, and then you got rejected. And then you could do the same thing. There is a bit of a box. I'll use actually the rectangle tool. That will make more sense. So then you have a bit of a trading range in here as well, okay? And then we'll draw one right here for that example. So you can see where we were rejected when we came up, rejected from this trading range here. And then when we came up here, we had a trading range as well, which we are also seeing resistance. So that's why I wasn't too excited to jump in immediately. Now, if we are able to break this high, I'm still not excited until we break this high. I want to see a 4-hour candle close above 73.75, 7400 would be even better. Now, this might mean missing out on part of the move, but with the price action we have seen lately, it's better to be patient instead of anticipating breakouts, because each time you anticipate a breakout without confirmation, the price moves the opposite direction. So this is really a time for us to, think about our strategy, take it slow, be patient, until the market makes up its mind. If, otherwise it's a guessing game. It's a 50-50 flip in this range right here. If we can break this rising trend line with the 4-hour candle confirmation, maybe that could be a signal for more downward action. But even if we break that rising trend line, I'm going to want to see the 67.75 horizontal region broken as well. And this isn't perfect. You can see we close candles beneath it here and here. We're just going to need to see that volume step in, guys, is the bottom line. Otherwise, this is just choppy range. We had a major sell-off. We bounced. We've been going sideways. People are looking for that recession type pullback, and it just isn't coming. You have other people who are calling for much higher, but you still can't get above 7,400. It's a waiting game. It's a waiting game. Ignoring these here, I want to zoom out to the daily, look at the fibs, and then we'll just do a real quick breakdown, okay? Because, a lot of the indicators, I'm sure, are going to be, they're going to be opposites. They're going to disagree with each other is one way to say it, okay? So looking at the Fibonacci's, we'll do one from the top. So if you draw this swing high to this swing low, we were looking at a potential target around 8,000, the 0.618 golden retrace, is a typical level that using the fib retracements that we usually go to. Bitcoin loves it for some reason. That's at 8,000. That's also where this trading range was here previously, so that would make sense. And we are getting stuck around this 0.5 fib at 7190. Let's just call it 7200. So not a surprising area to possibly get that rejection from the 0.5, but the 0.618 would be the next level of interest for a possible retracement rejection. So maybe we work our way back up to 8K, and then we have a bit of a correction or pullback, okay? Or if everyone is still looking for a correction at 8K, maybe we continue higher to, wait for it, the gap up at 9K on the CMEs. Maybe that's what happens. Maybe we get that gap closed, or we fill that gap at 9K, okay? So you know what I'm saying? Like, as long as people think there's going to be a pullback, it could just keep going. All right? There'll be a pullback when everyone's excited and greedy again. And then on the other side of things, if we do our Fibonacci retracement from the bottom of this move to the top, let me drag this over here. See if that's right. Hold on. Won't be exact, but that's good enough. We can see that I would say the 0.236 is at 66.30. We've mentioned this a few times. We kind of came down and tested it already. If you drop out of this rising channel, we could definitely, 66.30 would be a stop. But if you're looking a little further, 0.382 at 6,100 is a reasonable target for sure if we break down out of this. Now, we don't have to go much further. 6,100 might be where we bounce, but 56.80 is the 0.5, and then you have the 0.618 golden to the downside at 52.54. So we'll do the usual breakdown, but the weekly moving averages, the 200 EMA and 200 simple, are coming in this region. So I think this would be the lowest we go, 54 to 5,600. Otherwise, I think 6,100 is a fair target to the downside. So basically from 7,100 current price, I would say to the downside, 6,100, to the upside, 8,000. Okay, and we're using the fibs for those. These aren't just arbitrary 6K, 8K. Okay, that's actually using our fibs. All right, so let's do our usual breakdown. All right, it's already been 15 minutes. Let's do this. I mean, it's been hard to do some videos some of these days when the price action is just going sideways. The indicators don't do a whole lot for you. We have 1, 2, 3, 4, 5 weeks in a row of bullish weekly candles. This one was looking like a bearish one. There's still half a week left, but could just be a wick down and break up higher. We're looking to break this critical area, though. We haven't been able to break the red 100 EMA here. It's around 72.85. It was at 7,300. You can see where we've wicked up to it. We even wicked above it, but could not close candles above it. So we want to see a weekly close above the red 100 EMA at 72.85. Also a weekly close below this blue 10 simple that has been coming down pretty aggressive, is now at 71.50 resistance. So, a weekly close above these two, even better above the yellow 21 EMA at 76.37, but that might take some time. Let's just get to 7,600 first, right? But you can see how the how the red 100 EMA was support back here. It was support back in 2018. When you lost it, you dropped hard. Back here, we were looking at as support. Had we lost it, we're looking for a dump, but we actually bounced off of it. And now looking at support, flipped as resistance, typical. And if we do end up getting rejected, you do have this green 200 EMA down at 5,900. The pink 200 simple is at 56.83. That's why I was saying, even 5,400 might be a little low, where that 0.618 golden retrace was down beneath this. So, that's why I'm saying 6,100, maybe 5,900, where the 200 green, the 200 EMA, this light green EMA is getting tongue-tied, okay? So, the Ichimoku clouds, we've been battling with this blue conversion line at 71.75. So, can we at least close above 71.75? Haven't been able to do that at all. Came close here, but just, again, haven't been able to. This is also why I feel like, a pullback might be in the cards, because how many times, are we going to get rejected from here? But some people like to argue the more times that you come to, hit resistance, it starts to wear down and you begin to break it. You can make that argument here. 6K support was tested so many times it finally gave way. So that is, maybe we keep hitting this as resistance. Finally, it will give way. So it could be the opposite. Here, pressure, 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 broke. Pressure, 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 break up. Possible, okay? Your stochastic is up on the weekly stochastic. You are up, okay? So there is that to look at. This is why I'm pretty neutral at this point. I've been trying to catch little trades in between. I'll get a good one and then I'll get stopped out on the next one. So it's just like sideways price action, sideways BTC account. I mean, what can you do? Unless you scalp, and scalping is your forte, it's been difficult. But it has made me, maybe think, to readjust my strategy, less breakout trading, less looking for a big move, maybe more so just simple, basic buy support, sell resistance. When you're in that range, if you ever see yourself in the range, I need to do this more often. Just buy the support, sell resistance. Don't think about the larger move. Now, if you end up breaking out of that range, you could try to catch that breakout, but even better, wait for the retest bounce. So it'll break resistance, retest it as support and bounce. That would be a good opportunity, and you would still be buying support that way, okay? So your resistance here is going to be 77.86 on the middle BB. So just to show you what I'm talking about, in case that wasn't clear about the breakout, basically it would be waiting for this, and this is a weekly time frame, so we could look more at a 4-hour, but you would break above it and then retest it, and you would buy it when it retests as support. So break out, wait, comes back down to retest that support, then you buy support. So buy support, sell resistance, okay? But we have been at resistance this whole time, so that's why it's been difficult. All right, let's keep it moving, On the daily, we are hitting this 71.75 top of the Ichimoku cloud resistance, need to close above it, okay? So say you break out above it, likely we might get a retest. You would buy the retest as support, okay? To clarify that type of strategy. So you do see that resistance at 71.75 on the daily. Going over to the Bollinger Bands. Bollinger Bands, we've been snaking around the middle BB. So I'm not putting any more weight on this middle BB on the daily. It hasn't been very helpful. You can see there along the way. I can say, though, the upper band resistance is at 74.20 and the lower band support is at 65.77. Our moving averages on the daily haven't been very helpful either. This one, this dark blue 50 simple was acting as strong resistance, couldn't get any candles above it until you broke above it here and then got slight continuation before dropping back beneath it and back above it, snaking around. Not so helpful either. Your daily Stokes have been, crisscrossing, not knowing what to do. So the sideways chop is throwing off most indicators. That's why we're just, looking more at the horizontals. That's why I started the video with that, okay? And then, I don't even need to look at the 12-hour. It's going to be the same deal as the daily. We're going to move this video along. Going down to the 4-hour, you are back above the moving averages, and your stochastics are still rising. They haven't turned back down. I do want to see the 12-hour Stoke. I do like to see the 12-hour Stoke. The 12-hour Stoke was coming down and curling back up with this move. So when we were here, closing beneath all these moving averages, the Stoke was coming down. It looked like we were ready to have that pullback, but we were landing on horizontal support as well as the rising channel support. So there you guys go. Finishing up with the 4-hour, we can look at maybe the Bollinger Bands. Bollinger Bands, you did break nice above this middle BB. You can see that once you did get above it, it was a nice little pop there. But now floating around sideways, your upper resistance is going to be at 72.50 and your middle BB support would be 69.78. Our Ichimoku clouds. Ichimoku cloud bounced off of the green cloud and you have support down here at 69.88. And this is starting to put in a red cloud, but if we continue higher, it will twist. All the indicators messed up. So guys, let's just go out to the daily, take your indicators off, and we're just looking at this right here. We're in this channel, and within the channel, you have a range. Horizontal around 7,400. And you have this one here as well around 67.70, and you're still putting in lower highs. All right, so that's all we're looking at. This is definitely a test of your patience. This is a time that you need to be using tight risk management, low risk per trades, consistent position sizes, and you will still be able to make it out of these scenarios. Not the best time for trading. Trending moves are like this one here or this one here. Lots of money to be made when you have these type of moves here. But this sideways stuff is very difficult to trade. All right, and this was a pretty torturous trading range back here, I remember. Especially when it's low volume. Low volume sideways is very difficult. And traders will get wrecked. Revenge trading, too much leverage, in and out, indecision, choppy. So might as well just be patient and wait for the market to pick a direction. Okay, so hit that like, guys, if you haven't. If you haven't subscribed, subscribe. And thanks again for watching. This has been Crypto Rolly Roll. All right, we out.